Hey everyone. At $186.18 per share, Amazon stock price is at or near its record high. So that raises the question, is it a good time for Amazon stock investors to sell and take profits? Or what about new investors that haven't invested in Amazon stock just yet? Is it too late to go into Amazon stock? Should they wait for a dip in the stock price before investing in Amazon stock? I'll address all of those concerns in this video here, taking a closer look at Amazon stock, its recent performance, and its prospects over the next few years to come up with the conclusion on what investors should do with Amazon stock. So let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Alright, like I mentioned at the top of the video, Amazon stock price has absolutely exploded since 2023. You can see the price performance here from less than $75 per share all the way up to $186 per share as of this recording. Of course, I'm happy about that performance. I recommended Amazon stock as one of my top stocks to buy in 2024. So if you invested in Amazon stock at my recommendation, you will have made a great deal of return on your investment. But what about new investors, and is it time to sell? Let's take a closer look. In the last year, Amazon's total revenue grew by 12%, from $514 billion all the way up to $575 billion. But that wasn't even the most impressive part about its performance in the last year. Its operating income and free cash flow dramatically improved. Operating profits exploded by 201% to 12.2 billion all the way up to 36.9 billion, and management feels there's more room to improve its profitability by cutting the cost to serve, which I'll talk a little bit more about too. Now, year over year, its operating performance, its operating profit margin improved from 2.4% to 6.4%. Now, Amazon has never been a company that's generated very strong operating profit margins. 6.4% is not very high when you consider that in comparison to all businesses worldwide. However, in relation to its past, Amazon's operating profit margin has improved very nicely. And when you're generating nearly $600 billion in revenue, a 6% operating margin generates over $36 billion in operating income. So the business model for Amazon is not to generate strong profit margin, but is to generate strong profits, overall profits, not profit margins. And I will say that competitively speaking, that is more sustainable than generating strong profit margins. Because when you report operating profit margins of 40, 50, 60%, like some companies do, that quickly attracts competition. Very quickly. Competitors see those types of profit margins and they jump in both feet right away, investing billions of dollars trying to take market share away from you. But when competitors see Amazon's operating profit margin of single digits and they notice how many billions, tens of billions of dollars, hundreds of billions of dollars that Amazon has invested in its network to develop this level of operating profit margin, they say to themselves, no thanks. We're not going to try and compete with a giant like Amazon and trying to take market share from an industry that generates single-digit profit margins. It's not worth it for me as a business to try and compete with Amazon in this space. So it repels competition. So longer term, that's more sustainable when you do it purposefully, not when you generate small profit margins because your business is not lucrative enough, it's not good enough at executing on its business model to generate strong profit margin. When you do it purposefully like Amazon does, when you take increases in performance to provide better customer service, when you take increases in performance to improve the cost to serve customers, when you do it purposefully, small profit margins can lead to a more sustainable advantage. That's difficult to achieve. Not every business can do that. But if you do achieve it, if you can achieve it, it provides a more sustainable competitive advantage. And Amazon is demonstrating that it can achieve this. In 2023, Amazon delivered the fastest speeds to Prime members ever, more than 7 billion items arriving on time. But more importantly, it lowered the cost to serve, which improves its competitive advantage. It lowered the cost to serve by 45 cents per unit, which means it can offer better value to customers, which means it can improve profitability on a wider selection of items if the cost to deliver per unit is decreasing. Now it opens up more selection of items at lower prices it can deliver to customers, because now the delivery price to each customer is lower. And Amazon is saying that they're not done lowering their cost to serve. The management team has identified more opportunity to cut costs and improve the cost to serve customers. So all of that is great news for Amazon stock investors looking to jump in here. Now, if you look longer term at the last decade, its operating profit margin, you can see 6.41% in the trailing 12-month period. That's up significantly from around 1% in 2015. Amazon has demonstrated what I call economies in scale, and what many economists call economies in scale. I don't mean to infer that I invented that term. So as Amazon has increased revenue, as Amazon has served more customers, it's improving its profit margin. That's great. That's what you like to see as an investor. Similar with its cash flow from operations, 14.78%, up from around 6% in 2015. As it grows, it generates better cash flow from each sale. Excellent. Revenue growth, 13.91%, is accelerating again following the dynamics from the economic reopening. Remember, during the pandemic, Amazon's business absolutely surged. Revenue growth of 45% for a business that's generating hundreds of billions in revenue. So as economies reopened and people started spending money away from home again, that slowed down Amazon's revenue growth, but it's accelerating again to 13.91% in the most recent quarter. Management expects revenue growth to continue going forward. Now looking at the prospects for the next 5 years, the analysts on Wall Street that are following Amazon stock, they think it's going to deliver 30% earnings per share growth for each year for the next 5 years. That's phenomenal EPS growth for a company the size of Amazon. So whether you're looking at its history, the previous decade, or you're looking at the next 5 years, Amazon's performance is excellent, or expected to be excellent, to be sure. And finally, despite the fact that Amazon's stock price has soared, the valuation hasn't soared along with it. In fact, Amazon is trading at a relatively cheap valuation, a forward price to earnings of 34.6. When you see that it's expecting 30% earnings per share growth for the next 5 years, a forward PE of 34.6 is relatively cheap. So for investors of all perspective, whether you invested already in Amazon and you're sitting on major gains, or whether you've been on the sideline waiting for a dip in Amazon stock and you're wondering should you go in now, or whether you feel like it's too late to invest in Amazon stock, for all three of those scenarios, I feel Amazon stock is still a buy or hold regardless, right? So if you own it already, I don't think there's a reason to sell it unless you want to take some profit and reduce your exposure to Amazon stock. If you haven't purchased already, I don't think it's too late to invest in Amazon stock. Sure, you can wait for a dip or you can buy here. Either way, I think right now it's a good value even at current valuations. If you wait for a dip, it may never come. However, waiting for a dip might be a more prudent investing strategy, waiting for a better valuation to jump in. That's certainly prudent as well. Regardless, in all scenarios, I feel Amazon stock is a good investment. I still have it rated on my list of top stocks to buy for 2024. Even after it surged this much, I think there's more room for Amazon stock to increase. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.